Welcome back. I'm Pratap here. Today is the 1st April 2025. In this video, let us evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course YouTube playlist. I kept all the training lessons in this playlist. You just scroll down to the bottom of the page. So here at starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to the training instructions I provided. All the training instructions are available at our Telegram channel. I provided the link to our Telegram channel in this video description. So go to the video description, join at our Telegram channel. At the top of the Telegram channel, you can find pinned messages. Go to the pinned messages, and one of the pinned messages are having all the training instructions. So learn this course according to those training instructions. Then you will become a very good independent trader in the coming months. Please make use of this opportunity. Now let's get into the performance evaluation of the high liquidity zones. The previous end of the day report, we identified 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 high liquidity zones from daily and 75 minutes time frames. We got very good trades from 3 stocks. We will look into them one by one. First one is Cummins India. Cummins is a 75 minutes high liquidity supply zone. So our software identified this zone as a rally base drop. So this 75 minute zone is a fine tuned with 15 minutes time frame. So go to the 15 minutes time frame. In the 15 minutes time frame, here you have a drop base drop. This is a fine tuned 15 minute zone. And also we have another fine tuned 15 minute zone, but that is at the distal line. Because it is a distal line that is acting as a lower time frame zone horizon to the higher time frame zone. Look into this drop base drop. This 15 minute zone is the lower time frame zone horizon to the higher time frame. You already learned horizons are very powerful. They give you very good trade opportunities. So both we have drawn. From this horizon, it picked up the orders and the entire 75 minute zone is created. You already learned this concept in lesson 22. In case if you did not listen, please complete that lesson as early as possible. The most powerful concept gave you several trade opportunities and good trade opportunities for the last 6 months time. We've been seeing several trades based on this concept. Many successful trades. Okay. Now again, both these 15 minute zones we need to fine tune with 5 minutes time frame. Go to the 5 minutes time frame. Here you have a drop candle, 2 base candles and a drop and follow through candle. That way you can draw the zone, but because of this medium size leg candle part of the zone, if you feel the risk is high, what you can do? The supplementer to the 5 minutes. Whenever 5 minutes some clarity is missing, you can go to 3 minutes. And 3 minutes, if you find a good structure, you can plan. Otherwise, you can leave that zone. See here. Here we are having a rally candle, 2 base candles and a drop and then follow through candles. So this is the area you can plan your trade. And what about this horizon, 15 minutes horizon? Again, you need to fine tune. You can't take trade directly from 15 minute horizon. So we need to fine tune with 5 minutes time frame, especially risk management during the intraday. See here. Sorry, we are in 3 minutes. We have to go to 5 minutes. Five minutes, you have a drop, base, drop. This is the fine-tuned 5-minute zone inside the 15-minute zone. So this is the area, and not only 15 minutes, even this 5-minute zone is also fine-tuned 5-minute zone is also origin to this entire 75-minute zone. Look into this 75-minute zone. Prices went to this origin, picked up the orders, and then sharply prices came down. So this is the area you should plan the trade. And moreover, this 5-minute zone origin is also acting as a high liquidity zone. Why? Because several times this zone is getting tested. First time, second time, third time. Third time it is actually our origin for this entire 75. At that time, a lot of order flow would have been added again here because it is a 75 minutes origin. Now again it is tested, and even today it is tested. So today Cummins gave us two trades. First one is from this 3 minutes fine-tuned zone. Of course it is also 5 minutes, but 3 minutes risk is somewhat minimized. And we got the trade. And what about the target? We have a 15-minute zone here. We have a rally base rally, this 15-minute zone. So this is only the nearest one. There is one more here, but that is already violated previously on Friday itself. So this is the area we can target. But we got a trade today, morning 9:15 candle, 5 minutes candle. But this is 1 minute candle, you can't take the trade. So go to 1 minute. It is not 1 minute trade. 1 minute 9:15 trade, it is not. So you got the trade in 2 candles, actually 3 candles you got. 9:16, 9:17, 9:18. Even of course 9:19 also. After that sharply it came down. So definitely you should not have missed this trade. You would have got a trade. But this one is failed to reach. It is failed to reach 15 minutes target. But it gave you already 1:5 RR. I know some of you would have exited at 1:3 RR, but maximum up to 1:5 it has given. There are some people target 1:5, they might have exited here. But those who are waiting for this 15 minutes target, probably you might have exited when 1 minute trailing stop loss has been. Here you see rally base drop, and this one is violated, maybe you would have exited. That way you would have got a less profit, very less profit. And those who exited at 1:5 RR would have got the maximum profit. And those who exited at 1:3 RR, maybe moderate profit you would have got. Okay, our performance point of view, 1:5 I am calculating, minimum 1:3. If it gives 1:5 RR, I will consider for the performance statistics point of view. First, always I give preference to 15 minutes target, whether it is achieved or not. If it does not achieve, 1:5 achieved or not. If 1:5 is not achieved, minimum 1:3 achieved or not. If 1:3 is also not achieved, maybe that is not a successful trade, or maybe whatever the profit it give, sometimes profit will be booked at 1 minute high liquidity zones, target zones. That level we will book. Otherwise, if the trade is stopped out, probably we have to accept the loss. This is the procedure we are following. So 1:5 level it has given. So performance point of view, I have captured that. But where you exited is depending on how you are planning your trade. But this is the maximum opportunity it has given. The first trade in Cummins. And it has given you 5,692 rupees profit, which is 5.8% ROI as per one futures margin cost. So very good ROI. Close to 6% it reached already. Actually, if you calculate it till the bottom, because we calculated up to 1:5. Sorry. it's not 1:5.3. I think this one is slightly moved. Yeah. So this is 1:5 because entry is at the 3 minutes level. So 1:5 achieved. Suppose some more, if you would have extended till the bottom, maybe 1:6, maybe 6% ROA it might have achieved. After achieving 6% ROA, again it started moving up. This time this fine-tuned zone is violated because prices almost reached very close to the distal line. See, prices reached very close to the distal line. Taking second trade is not advisable from this zone. See, if it touched and came down, or if it touched, went little and again came down, definitely we would have considered second trade from the same zone during intraday. But already prices reached very close to the distal line. Taking trade is a high risky. So that is what happened. This zone is violated, and next we have a 5-minute horizon. And this 5 minutes horizon gave you a trade at 9:41 candle. Actually 2 candles it was there. 9:40 and 9:41. Definitely you should not have missed this trade. After that prices came down and finally reached 15 minutes target. Some of you may feel the risk is somewhat high here. Yeah, including stop buffer, the risk is 1.9%. So it is below 2%. Maximum accepted risk is 2%. Some people feel the risk is high. Maybe you might have adjusted a little bit. During the adjustment, if your trade is executed, you would have got a good trade. Because some people I know, you accept only 1.5 risk. Some people accept only 1.2 risk. Some people accept 1% risk. Maybe those people accepting 1% risk, maybe you might have missed this trade. Those who accept maximum 2%, you would have got this trade. Maybe 1.5% also might have been executed, but you need to take entry a little inside. You need to fine tune the entry. But anyway, a performance point of view, within 2% risk level, it reached the target. And how much profit it has given? You know that lower time frame zones are very powerful concepts. And Cummins, it has given you 11,302 rupees, which is 11.5% ROI. Why such a big ROI it has given? Because margin cost is less than 1 lakh. One future margin cost for Cummins is less than 1 lakh. So these are the 2 trades it gave you. One is 1:5 RR trade, and another one is a trade reached up to 15 minutes target. Of course, this is also there around 1:4.5 RR is there because the risk is high. So RR has given 1:4.5. Anything above minimum 1:3 RR is a successful trade, but it is even reached 15 minutes target. So this is about Cummins. And the next one is DMART. DMART is a 75 minutes high liquidity demand zone. Our software identified this as a rally, 3 base candles, rally and follow through candle. This is how our software identified, and this one is fine tuned with 15 minutes target. It is a very interesting, everybody please listen. This is the second time we got this scenario. Previously, I think 1 month back or 1.5 months back, we got the same scenario, what I am going to explain. This is a multiple LT of lower time frame zones, multiple lower time frame zone concept. Previously also, I explained for one of the stocks, previously we observed this scenario. It's a rare situation, rarely you see. And today again we got multiple LOTL. What is multiple LOTL? Lower time frame zone. You have a lower time frame zone. That lower time frame zone is having another lower time frame zone in its next time frame. Such kind of concept it is. Okay. 15 minutes, we have identified a 15 minute zone. Here this is a leg in, you have 3 base candles and then you have a rally candle. Rally, base, rally. And this rally, base, rally again fine tuned with 5 minutes time frame. Go to the 5 minutes time frame here. You have a drop candle, you have 3 base candles, you have a rally candle. This is the origin. Drop, base, rally is the origin for this fine-tuned 15-minute zone. See, the fine-tuned 15-minute zone picked up the orders from this origin. See, this entire move started here. Not only 5 minutes move, this is also move for your entire 75 minutes leg out also. This is the leg out formation for 15-minute zone as well as even this entire 75-minute zone formation also took place from this zone. Okay, here below there is one more zone. Here you may ask a question. First actually I saw this is a leg out. This is a base candle. Here leg in structure is not good. I thought maybe we can take this is the leg in. Leg in, base, rally. That way we can draw the zone. This is how I have drawn initially. But here this LOTL. Then if that is the case, this is considered as a LOTL. But somehow I am not fully convinced with this leg in. So that's why what I did, I have drawn this drop, base, rally. I thought maybe in lower time frame it might be having a proper origin, the real origin. The real origin is there in 1 minute time frame. Go to 1 minute. Actually it is a high liquidity zone and also origin. See here you have a drop, you have a base, you have a rally, picked up the orders and again moved up, picked up the orders, again a small move. Multiple times here it is picking the orders. See here, drop, base, rally created, again drop, base. This time it is a big rally candle. Rally, rally, follow through. Which one? This 1 minute zone. Forget about the time being, forget about it. Okay, for bringing clarity, let me delete 5 minutes and I will add again. Now you see, you have clarity here. This is the area holded the prices. Again drop, base, rally, LOTL zone is created again. Now it picked up the orders. And the entire 75 minute zone is created from here. The move started from here. See, the move started from here. That means this, let me delete 5 minutes once again. Actually, this 1 minute zone is the origin for this entire 75 minute zone. See, actually, it picked up the orders from this 1 minute zone and entire move is started. Then why I added 5 minute zone here again? Because it is looking like first this is the 1 minute zone is the origin for this 5 minute zone. After that both together is the origin. See, many times what happens, the price may not reach up to this 1 minute origin level. Maybe today it reached, that is a different story. But many times these 5 minutes level prices reach and they will be moving up. That way we will be missing the trade. Now we have two origins. We have a 1 minute origin to the 5 minute zone. Now both together is the origin for this entire 75 minute zone. So planning the trade at the 5 minutes entry. But what is the stop loss? Stop loss should not be at the 5 minutes level. The stop loss should be 1 minute level distance. Based on that you should calculate stop loss. So that means you need to combine both these zones. And below you should add the stop buffer. The blue color line, what I have added is, that is the stop buffer. And this is the one after, this is how your trade plan. Now you may ask a question, because of adding like this, risk will be increasing a lot. Actually risk is only 1.1% only. So 1.12 or 13 something is there. That's it. So close to 1% your risk. 1.12 means close to 1%. So risk there is no issue. But we should not miss the trade. That's why your trade plan should be combining like this. If you delete this 1 minute zone, and if you are planning your trade in this 1 minute, see 1 minute it just touched the 1 minute and moved up. Next time price may not reach this 1 minute, a little below it will be started moving up. At the time you will miss the trade, right? That's why adding 5 minutes is very, very important. Why we are finalized intraday trading point of view? Why we finalized 5 minutes? Because we don't want to miss the trades. We know 5 minutes risk is most of the time up to 2% level. Of course, below 2%, majority of the situation. But between 1% to 2% it will be there, majority of the trades. So we don't want to miss the trades. And risk is also within our risk accepted limit, most of the 5 minute zones. So due to that reason, always entry should be at the 5 minutes level. Because of adding this 1 minute, actually this is the real origin. 1 minute is the real origin. It is the origin for the 5 minutes, and also it is the origin for this entire 15 minutes, fine-tuned 15 minutes zone. And risk is also small. It is only 1.12% risk. That's it. And today we got the trade. When we got the trade? We got the trade at 11:59. After that, a lot of time price has moved here. Did you notice? This zone is pierced here. The 1 minute zone is also pierced, but within the stop buffer. So the blue color line what we have drawn, that is the exact stop buffer, 3% ATR value. So came very close to this, and then see sharply how it moved. That's why stop buffers are very, very important. Many times stop buffers will save our trades. Of course, the day it is violated, we have to accept. After stop buffer, some trades will be violated. You have to accept. That we will see in the next stock. Next stock, 2 trades it gave. One is stopped out and one gave a successful trade. Okay, here you have a 15 minutes target. Drop base drop. And unfortunately today price did not reach up to this 15 minutes target. But it achieved 1:3 RR is achieved. It gave you 1:3 RR. Of course, a little above 1:3 RR it has given. I calculated up to 1:3. Maybe some of you, those who expect profit till the 15 minutes, they will be holding. But what is the rule? After achieving 1:3 RR, you should protect your profits with the trailing stop loss. Those who exited at 1:3, you would have got the maximum profit. Whatever the profit, because I am showing performance point of view, maximum 1:3 I am showing. But in practical, you may be expecting your profit up to 15 minutes. You might be holding the trade. If you are holding the trade, what is the rule? After reaching 1:3 RR, immediately your trailing stop should be enabled. Go to 1 minute. Here you have a drop base rally is there. So probably somewhere a little below you might have exited. Those who are using trailing stop, you keep small buffer, very small. Not based on ATR, it's small. Because trailing stop and all, you can't use ATR based stop buffers. Sometimes you know what happens, it will again go little below and again it will move. That's why generally trailing stop we use very teeny small buffers, minute small buffers. Okay, somewhere in the blue color line you might have exited and booked the profit. Maybe small portion of the profit what this 1:3 RR gave, that small portion, extra portion you might have missed it because your trade is stopped out. See, they created a drop, rally based drop 1 minute, maybe it is very powerful. Okay, till 1:3 RR it has given a profit, DMAT has given a profit 4,125, which is 3.5% ROI. as per one futures margin cost. So this is 1 min and 5 min LTF horizon. This is the second example we are seeing. Generally we have an horizon, 75-minute zone or fine-tuned 15-minute zones. They have horizons, 5 minutes horizon. That 5-minute horizon again having 1 minute horizon. Rarely you see. When such kind of horizons are there, you should combine both the zones. Previously we have seen, definitely, in last 1.5 month period only, we have seen that example. I don't know how many of you remembered that example. If anybody still remember the example we discussed earlier, 5-minute horizon, again having 1 minute horizon, just please put in the comment section, so that at least I know how many of you remember this concept. But first time if you are learning, remember this concept. It is a very important concept. An horizon having again a 1 minute horizon, 5-minute horizon having 1 minute horizon, you should combine both the zones. Actually, strictly speaking, 1 minute is the real horizon, because from there only even this entire 15 minutes orders are picked up. To be honest, this is from this area, again the actual orders are picked up. But previous example, what you have seen, it is not like that. Picked up the orders from the 5-minute zone, but the 5 minutes again having 1 minute horizon, price did not reach up to that 1 minute horizon in the previous example. But this example, prices reached up to 1 minute horizon, picked up the orders, and then prices were started moving up. So that's why what I am trying to say, 1 minute is the real horizon. But why we combine both and planning trade? Sometimes you may miss the trades. We don't want to miss the trade. If you would have taken a trade at 1 minute horizon, your risk would have been further minimized. You would have got even more better ROI you would have got. But the problem is, this 1 minute horizon, if you plan your trade, many times you may miss the trade. Today it is a different scenario. Prices reached and it is pierced and then gave you the profit. But every time it won't happen like this. Just touch and sharply it will move. You have seen previous example, right? What happened in the previous example? Cummins. Look into Cummins. From the horizon, how sharply it came down. It reached. In the next candle, prices were started moving up and going down, small movements in between, and then sharply it came down, finally reached 15 minutes target. Okay. So this is about DMAT that gave you 3.5% ROI as per one futures margin cost, that is up to 1:3 RR. Okay, and the next one is SRF. SRF gave you two trades, one is successful, one is failed, and it is a 75 minutes demand zone. However, software identified this failed ERC candle. Dynamic Q, it is like a rally candle, and 3 base candles and a rally candle. I think our software considered this itself is the failed ERC leg-in, not this one, because this size is also big. Actually, this is larger than the medium size. I think software considered this one. That's why I drawn the zone between these two candles. So this is the leg-in. These two are the base candles and then rally candle. Okay, this one is fine-tuned with 15 minutes time frame. In the 15 minutes, see here you have a failed ERC candle as a drop, and then 4 base candles and then rally candle. And also there is one more drop, 5 base candles and a rally candle. So you have two 15-minute zones. This is the bottom one, this is the upper one. This is the failed ERC drop and 4 base candles rally. This is a drop base rally. Okay, both these zones again fine-tuned with the 5 minutes time frame. Go to the 5 minutes time frame. In the 5 minutes time frame, we have the horizon. See here, drop, 2 base candles and rally. Follow through candles. Maybe some of you may consider this rally base rally, but I'm not really comfortable with this leg out candle. That is one thing. Again, if you draw both these zones, the horizon as well as this fine tuned, they are almost near LOTL. Then you have to combine both. Risk management is not easy. So that way you have to focus. If this is the candle here, I would have considered a leg out candle, but this is a medium size candle only. Of course, you can consider imbalance started from this candle. That way you would have you can draw the zone. Rally, base, rally. Imbalance is from here. But my primary concern is about this zone, because if you keep the stop buffer almost touch this zone. Then you have to combine both. But this is the actual horizon, and from here it picked up, and definitely you should plan your trade from this drop, 2 base candles, rally, follow through. So it picked up, again moved a little bit, again picked up. This time how sharply it pushed the market up. And also this is the one. This is a rally, base, rally. So these are the two zones, fine-tuned zones. One is the horizon and another one is the actually the reason why I considered is actually this is also base candle, not a leg candle. See, the body is also big, almost 50%, close to 50% body. So I consider drop, base and then rally. So it is almost LOTL zone, this one. Drop, base, rally. But whatever it is, this is the area you should plan the trade. That is what happened today. Prices reached that horizon. Morning 9:15, go to 1 minute, you get clarity. Multiple times the zone is within the zone here. This is the morning 19 candle, 9:20. See, multiple candles, it tested this zone. And here, did you notice slightly this is pierced? It is slightly pierced within the stop buffer only. And then prices were started moving up. And finally reached the 15 minutes target. I know some of you might have exited the trade here because the gap is started. Sometimes you know what happens in the gap area, order flow is very strong, it will push the market down. Okay, but anyway, till 15 minutes it reached. According to our statistics point of view, first priority always we give whether it reached 15 minutes target or not. Because many of the high liquidity zones reach 15 minutes target. Few will miss reaching 15. Those few stocks, either they give you 1:5 RR or 1:3 RR. Go to 15 minutes. Here, drop, base, drop. So it gave you trade in this candle, reached in the next 15 minutes candle. That means almost half an hour the trade is completed. So when it gave you the trade at 9:19 candle. And when it reached the target, 9:40 candle. So in 21 minutes, the trade is completed. So how much profit SRF has given? SRF gave you 11,793 rupees profit, which is 5.7% ROI as per one futures margin cost. Second one is stopped out. See, the second trade is gone easily. This is the one, including the stop buffer. It gave you 1,706 rupees loss. And it is 0.8% negative ROI. See here 11,000 we got 11.5%. Here 11,000 we got only 5.7% ROA. What is the reason? Because here it is margin cost is less than 1 lakh. But here margin cost is a little over 2 lakhs. Around 2 lakh 7,000 rupees something is there. Around that value. So that's why your ROA is reduced here. Here ROA is 11.5 because your investment is less here. Because we calculate ROA based on our investment. But we are calculating always based on futures margin cost. But here looks like, okay, we lost 1,700 rupees. But ROA is still only 0.8%. Because margin cost is around 2 lakhs 7,000 rupees. So this is about SRF, both the trades. After that the zone is gone. And apart from this there are two more trades. Let me show you. First one is angel one. This is a 75 minutes high liquidity demand zone. See how it moved. Prices reached to the fine-tuned 5-minute zone. How sharply it moved up. It would have given you huge profit, right? First of all, how I fine-tuned this zone? First of all, how our software identified this zone? Our software identified this as a rally. This is the rally. 3 base candles and a rally candle. 75 minute zone. And this one is fine-tuned with 15 minutes time frame. See here failed ERC candle as a drop, base, rally candle. This is the fine-tuned 15 minute zone. And also here also there is one more fine-tuned zone. Drop, base, rally. Drop, base, rally. We have two fine-tuned 15 minute zones. Okay, both these zones again we need to fine-tune with 5 minutes time frame. Go to the 5 minutes time frame. In the 5 minutes time frame, here structure is not really good, right? Actually it is looking like a drop, 1, 2, 3, 4, 5 base candles and a rally candle. So risk is also, large risk is there. So that's why what I did, definitely I know there could be some 3 minutes zone will be here. But 5 minutes is not, clearly it is not showing here. So definitely this is the area some imbalance would have been happened. That is what I thought. So the moment I go to the 3 minutes, see in the 3 minutes it has excellent drop candle, 2 base candles and rally candle. Or if you would have considered this as a failed ERC candle, still you could draw a zone like this. See today price entered into the zone and then sharply. In case if you consider this as a failed ERC, but okay, this is okay. Medium size candles only. Till the 15 minutes target it might have achieved, right? Is there any 15 minutes target? Here you have drop, base, drop. See till this area it achieved, it reached the target. But why I didn't mention this trade in this area? The reason is it is a morning 9:15 1 minute candle. Morning 9:15 1 minute we can't plan the trades. Maybe if anybody would have planned the trade at the end of the morning 9:15, at the time if prices reached here, maybe your trade would have been executed, maybe. Exactly morning 9:15 beginning we don't plan. The reason is many times market move with gap up, gap down. We want to avoid those scenarios. And 1 minute huge volatility will be there. That also we want to avoid. So that's why according to us it's not a valid trade. Go to 1 minute. See what happened in 1 minute. See, with the gap down prices, how sharply they came. See the gap. Such a big gap. But this is able to hold. But many times what happens sometimes, if institutions cancel their order flows here, you will see below the zone prices will come down. If your trade is executed and immediately next prices came down with a gap down, how much loss you get? Beyond 2%. maybe 3%, 4% or 5% loss you will get. So that is the reason why we want to avoid such kind of gaps below these zones. See, within the zone you got the trade and moved, it looks okay, everything excellent. But every time it won't happen like this, right? Prices may open below the zone. So due to these reasons, or maybe just open and sharply again with the next tick wise means like maybe seconds wise or milliseconds wise. First tick it looks like your trade execute, and next tick again for the gap down, it will go down with a huge gap down. That way also you get huge losses. Your trade is executed, and the next second or next fraction of second, prices further moved down with gap down. All these situations will happen at morning 9:15 candle. So these are the reasons why we want to avoid trades, especially intraday trades. We don't want to take such a huge risk. It looks like if you take the trade, we would have got a very good profit. Okay, but we can't take the trade. So that way, Angel 1, we missed a very good trade opportunity. And also it is having one more fine-tuned zone below. See, this is a drop candle, base candle, rally candle. But here risk management is very big. When you want to plan trade in such kind of zones, you should take deep, you have to take the trade, or better to avoid the trades, or sometimes lower time frame horizons will be there. At the time you can plan, but here there is no lower time frame horizon here. First of all, this is not a, this is the one. See, we have excellent zone is there, no drop, base, rally. Maybe not a fine-tuned zone, maybe it may act as a trap to this zone. Do you agree? Actually, first of all, this is not a base candle. Looks like a base candle. Why not a base candle? Just pause the video. Can you identify the reason why it is not a base candle? Maybe you may think maybe candle body is between 50% and 75%. That's why we did not consider base. I told you, it is between 50% and 75%. You can apply your judgment and you may consider. Maybe this could be this. Maybe the body could be maybe around. Maybe some 60% might be there. Sometimes you may consider. Actually, reason that is not the reason. There is some other reason. Did you get the idea? See, it gets some hidden body. See the close of this candle. It gets some hidden body. The moment it gets hidden body, it gets some more body. Now wick is limited to this only the small portion. That means this body is this candle is having more than 75% body. You have a drop candle, you have a medium size rally candle with a hidden body, and then again a rally candle. That way this may not be qualified as a drop base rally. It is like a drop, rally and rally. That's why sometimes our eyes will cheat us. Always you should properly focus on these gaps and all. And with those gaps keeping in your mind, you have to draw the zone. By keeping those gaps in your mind, you have to identify really it is a base candle or a leg candle. So that is the reason why you can't use this as a trap. Maybe it didn't overlap. Even if it is slightly overlap, you would not have considered. Okay. See, even after adding body also, suppose it is having a large wick towards the upside. Let us assume this is having a big wick towards the upside. At the time, even after adding some small extra body also, still the candle will qualify as a base candle because of the large wick it is having. Because of the wick, the body percentage will come down to below 75 or maybe below 65%. Or close to 50%. That way you consider as a base candle. But this is having a very small wick here. Even after adding body, the body percentage will still go beyond 75%. If it is having a large wick, a little extra, large means not very, very large, a little extra, maybe up to here. Because of the small body, the candle is still a medium size candle. But in this case, after adding that small extra body, the body percentage is going beyond 75%, and this candle will be qualified as a medium size leg candle. So there are no base candles, you can't draw the zones. Maybe some zones might be there at 1 minute level, but you can't plan for your HLQ zone strategies. Those 1 minute small, maybe scalpers might be using them for their trading. Just for few paisa movement, scalpers will be making profits. Okay. Anyway, this is how we fine-tuned Angel 1, and reason why we did not take trade, this is a 9:15, 1 minute candle trade. And one more trade we got, look into Patanjali. Looks amazing everything. Gave a very good profit. And not even 9:15 candle. Somewhere at 12 o'clock or close to 1 o'clock. 1 o'clock you can take trades. You should not avoid 1 o'clock trades. Maybe at 2:30 or 2:45 you avoid the trades. 1 o'clock definitely you can plan the trade, because you have another 2.5 hours. I mean 1.5 hour trading session. 1.5 hours? Sorry, 2.5 hours. You have another 2.5 hour trading session. So 1 o'clock we should plan our trades. So what happened here? First of all, this is a 75 minutes high liquidity supply zone. Our software identified 75 minutes high liquidity supply zone, and also our software identified it is also near to the zone. We are also having a demand zone also. So when we have zones very near to each other, demand and supply zones, we get trade opportunities on either side. Even though software listed stocks near the supply zone, this is as good as near to the demand zone also. That's why we can plan trades either side. That is what always I say. Whenever we have demand and supply zones, you can look for trade opportunities on both sides. Okay, this Patanjali already explained how I fine-tuned this 75 minutes zone earlier. So that's why I'm not getting into fine-tuning the zone. But if you go to the 15 minutes time frame, no recently created zones here, and also no dynamic zones also here to plan any trades today inside this. After that they came up to the demand zone. In the demand zone definitely you can plan a trade. Demand zone 15 minutes. Here you have a drop base rally is there. This I considered failed ERC, large candle. See, very large candle. That's why I don't want to see. This is a medium size if you consider. This is much bigger than this candle. Large candle. So I considered failed ERC. So failed ERC you can't keep. You should not keep failed ERC candle inside the base. I remember recently one of our members asked the question. We have large candles with less body. Can we keep it inside the zone? That is the question he asked. See, inside the zone, you can keep only medium-sized candles only, not the large candles. Large candles are, even body is less, we call it as a failed ERC candle. Large candles either you can use as a leg in or leg out. That's it. You can't use in the base. Large candles, less body, they can use as a leg in. Large candle, small body, we call it as failed ERC. Failed ERC you can use as a leg in. But leg out using failed ERC candle, so many conditions are there. Only in the dynamic view, if the candle looks large, then only you can consider as a leg out. Otherwise you can't consider. So you should apply dynamic views concepts that I explained in Q&A 2 video. Those who wants to understand dynamic views, please go to question and answer 2 video. In the playlist you have a Q&A playlist is there. Go to the playlist, access the second Q&A video. Okay. So we have only this one valid one, drop base rally. This drop base rally again I fine tuned with 5 minutes time frame. So here you have a drop base rally, 5 minute zone is there. See today prices just entered into the 5 minute zone at 1 o'clock, 5 minutes candle. After that they were near to, then started moving up. That means demand holded the supply. All the supply is consumed in these candles. No more supply, easily prices moved. And is it reached the target, 15 minutes target? Here the immediate 15 minutes is a rally base drop. If you draw this, this is violated, further moved, even this drop base drop, second 15 minutes target also reached. After that, that is also violated. And finally it reached the third 15 minutes target, close to that it reached. And market is over. Timings. Okay, first of all here, why can't we take a trade? Because first target anyway it reached. It gave a good profit. The reason is RR, risk reward, is not there up to this. Otherwise it could have been a very good trade for us. If this zone is not there, if you would have considered this drop base drop, definitely you got a very good RR. But here you have an immediate 15 minute zone is there. And candle is also very good, excellent leg out candle. See, let me show you the RR. So this is our entry. What is the entry? 1774.15. 1774.15 I need to set. Okay. So entry is set. Stop buffer time being approximately I will add something. Adding least only. Even least also you won't get. I'm adding least. Actually you can extend some more stop buffer. But anyway. And this is our target. What is the RR you got? 2.39. 1:2.39. Okay, to get the 1:3 RR, what is the technique you can use? Fine tune the entry until you get 1:3. So I'm going a little inside. Okay, if I take my trade here, what is the value here? 1773.50 paisa. Let me draw a horizontal line at that point. 1773.55 paisa. Okay, exactly that is our entry. You get 1:3 RR up to this 15 minutes target. Let me delete this tool. Which tool? Long position tool. I'm deleting. Now you see clearly. Now tell me, price reached this 1:, a little short. See, our entry is 1773.55 and the low of this candle is 1774. So that means almost 1.5 rupee difference we missed the trade. Otherwise we would have got the trade. Okay, after reaching, whether you are expecting higher trades, trailing stop loss and you will apply. But before that, minimum 1:3 it should reach. To get minimum 1:3 up till the 15 minutes target, we fine-tuned our entry up to this blue color line. The blue color line price did not reach today. Narrowly you miss that. We will miss the trade. Because you can't add entry buffer here. If you add entry buffer, you won't get 1:3 RR. What is the meaning of fine-tuning the entry? We don't want to use any entry buffers and all. We want to take inside the zone we want to take until we get 1:3 RR. Of course, if we are going near to the distal line and if you fine tune, you can't accept such kind of trades. There are higher chances they will be violated. But when you fine tune, they are very close to the proximal line. Go to the 5 minute, you get better clarity. This is 5 minutes view. We are very close to the type 2 proximal after fine tuning, but missed it. Otherwise, this could have been a very good trade. But the point you have to understand, okay, we missed the trade, but high liquidity zones, how they are working. This is what everybody should observe. Why prices are falling, and from high liquidity, fine-tuned areas only why they are moving up. Majority of the zones, after fine-tuned zones, maybe your trade may miss due to some other reasons. You may miss the trade. Forget about whether you missed the trade or executed the trade. But after reaching fine-tuned zones, only prices are started moving. What is the reason? Of course, after reaching fine-tuned high liquidity zones, sometimes zones are violating. But they are rare situations. But majority of the situations, high liquidity zones are preventing the fall. Once prices reach high liquidity zones, again the prices are changing its direction, price direction. What is the reason? Because these zones are having liquidity, more liquidity. That's why we named it as high liquidity. That means more institutional order flows will be there in that zone. Because of more institutional order flows, they will be having the capacity to change the price direction. Price direction means market direction. Okay, if I say market means you will think about overall market. Maybe that particular stock, maybe stock is the right word. That particular stock price direction, it is changing. So that's why high liquidity zones are very, very important. So this is, even though it reached 15 minutes target, the reason why we did not consider this trade, slightly it missed the entry with 1.5 rupee difference. This is a 1800 rupees stock. With 1.5 rupees difference, we missed the trade. The low of this candle is 1774, but our entry is 1773.55 Sorry, not 1.5 rupee. Maybe I made a mistake. It is just 45 paisa difference. I am sorry for the mistake. Low is 1774. This is 1773.55 So that means 45 rupees difference we missed the trade. That means in few paisa we missed the trade. I know some people also miss the trade with 5 paisa difference or 10 paisa difference. When you make your risk management very strict, there are some people missed it previously. So these are the trades that would have given you profits, but due to our risk management factors, we didn't consider few trades, couple of trades. Okay, remaining trades, we did not get any remaining trades. Let me quickly go through them. Some of the zones already I explained how to fine tune previously. This is the one we discussed previously, IRFC. All these how to fine tune I explained in the previous videos. Please go through those videos. Price did not reach. And the power grid rally base rally. This is 75-minute zone. Here we have rally 1, 2, 3, 4 base candles and rally. And also here you have again rally, 2 base candles and rally. You have two 75-minute zones. And within the 75-minute zones, again I have drawn 15-minute zones. This is a very tricky analysis. Observe carefully. And here at lower time frame, see inside the zone, I didn't find any proper 15 minutes. But at the distal line, see here I have seen a failed ERC rally. See hidden body is there. At the hidden body, rally. At the big hidden body, it is a rally candle. You have 2 base candles. You have a rally candle. And this 15-minute zone overlapped with this fine-tuned 75-minute zone. It is overlapped. A part is inside the zone and remaining part is outside. Okay, so this is the LTF zone. But this LTF zone, again fine-tuned 5 minutes, that fine-tuned 5 minutes is not overlapped. Did you notice? But definitely, when this zone is violated, it will pick up the orders from this zone and it will move up. That way we will plan our trades. But exactly 5 minutes fine-tuned, fine-tuned 5 minutes is not overlapped. But previous example you have seen the 1 minute zone. Which stock it is? We discussed about Cummins, right? Do you remember Cummins? Is it Cummins? Not Cummins. DMART, yeah. In DMART we have seen two zones, 5 minute zones. 5 minute zones again having 1 minute zone. That 1 minute is overlapped with even 15 minutes fine-tuned zone. But that is not the case here. This 5 minute zone is not overlapped. Why it is not overlapped, we will see once we go to 5 minutes time frame. And also here, this area also, have you noticed? Here also drop base rally. This is also lower time frame zone overlapped with fine-tuned 75 minutes. That means both these fine-tuned 75 minutes are not having fine-tuned 5 minutes in the middle of the zone. They have fine-tuned 15 minutes, not 5 minutes, sorry, 15 minutes. The fine-tuned 15 minutes not inside the zone, but the fine-tuned 15 minutes at the distal line. Distal line, when we have a fine-tuned zone, immediately topic name will be changed to lower time frame zone as an horizon. That indicates a strong order flow. So here we have two fine-tuned 15-minute zones at the distal line of the 75-minute zones. That is lesson 22 concept. Okay, now again both these 15 minutes you should fine-tune with 5 minutes. But here within this area, when new order flows are created, at the time drop to base candles rally is created with follow through candles. So that's why you can consider this is a fine-tuned 5 minutes. Why fine-tuned 5 minutes? Because this zone is there inside the 75-minute zone and also overlapped with this 15-minute zone and also overlapped with the entire daily zone. But it is exactly within 75-minute zone. And moreover, after 75-minute zone, these new orders are created. So that's why it is not a lower time frame zone horizons we consider. If you want to consider lower time frame zone horizon, this fine-tuned zone should exist before this 75-minute zone. That's why these concepts properly you should understand. It is just a fine-tuned 5-minute zone, that's it. It is not a LTF zone. LTF zone should always exist before 75-minute zone creation. You may say 15 minutes is created, within that only it is fine-tuned. You may say no, but it is newly created after the 15-minute zone. These are the new order flows, not the old order flows. And again here you have a drop base rally is there. So this is a fine-tuned 5-minute zone inside the 15 minutes order flow. So obviously this order flow will be having a strong order flow. Why it is strong? The reason is before entering itself from the 15 they were started moving. That means some orders are even spread before this zone. Due to that reason, before reaching fine-tuned 5 minutes, prices started moving up. That indicates this zone will be having strong order. By the time prices reach here into this zone, majority of the times, I would not say 100%, but majority of the times the supply might be weakened and this demand will push the market up. And also here also this 75 minutes, this 15 minutes is the horizon, and within the 15 minutes again rally base rally I considered. And this is the order flow, and this 5-minute zone, also the 75-minute zone overlap. Did you notice here? Here 5-minute zone it is overlapped. This is having a strong order flow. So this is how I have drawn this. But anyway, today prices did not enter into the zone. Next one is RBL Bank. This is also a daily zone. RBL Bank, it is a rally base rally. This one is fine tuned with 75 minutes time frame. RBL Bank also rally, 4 base candles rally, and also here also rally, 2 base candles and a rally candle. 2 order flows. Fine tuned with 15 minutes time frame. What is that? This is the one we already discussed, right? Then why I am looking into power? Oh, still we are in power grid. RBL Bank we didn't go. Sorry. I thought we are in RBL. We were in the power grid only. Okay, RBL Bank, it is a daily zone. Rally, 2 base candles and rally. This one is fine tuned with 75 minutes time frame. Here I have rally, 1, 2, 3, 4 base candles and a rally candle. The 75 minute zone. Within this 75, we have 2 15-minute zone, drop base rally, and also here also a drop, 3 base candles and rally. This is having a fine-tuned 5-minute zone. Did you notice here I did not draw fine-tuned 5-minute zone because I am not comfortable with this structure inside 5-minute zone. Why? Let me show you. You may say we can drop 3 base candles and rally. This is a medium size candle, you can keep in the base, you can draw a zone. But I am feeling it is not a medium size, it is a large candle. Why large candle? I will explain. But before that, here we have a rally base rally. So this is a fine-tuned, perfect fine-tuned 5-minute zone. But why I did not comfort? Because of this large candle, size is looking maybe medium. Let me hide that. Then you get clarity. See this candle, see here how big it is. It is a big drop candle. See, all these are all large candles, right? This is bigger than these candles. Look into this. This is bigger or this is bigger. This is even bigger than this candle. So it's a large candle. So that is the reason why I didn't consider. But even I tried in 3 minutes also. 3 minutes also, the same candle is there. See, now we are in the 3 minutes time frame. See, 3 minutes also you see. It is a large candle. So that's why I left it. I don't want to take any risk in these zones. Got it? Okay. Anyway, today price did not enter into the zone. But how we are fine tuning is very, very important because you should learn all these skills properly. Next one is Crompton. This is a 75 minutes, daily high liquidity supply zone. Crompton previously we fine tuned, we didn't find any fine tuned areas, we left it. Even today also you look into the 75 minutes. Previously also we didn't draw any zones here. I considered this as a medium sized candle. That's why I already explained in the previous HLQ analysis videos. So that is the reason why we know. But today touched the zone and again sharply came down. Okay, next one is Naukri. This is also daily high liquidity supply zone. Naukri I already explained in previous videos how I fine tuned this zone. This analysis I already explained. And it is having a tested fine tuned zone, so we can't plan a trade. Directly I am going to 5 minutes time frame. Previously the zone is tested. Or if you consider this as a rally based drop, if you consider it is a LOTL zone is created here, then you can plan a trade one more. See, the risk is very high here. Maybe. But remember, every LOTL doesn't make this zone as a high liquidity zone. But possibility is there. But anyway, Today prices did not reach into this zone. But is there any newly created, any new order flows created in the recent time? No. See, there is no 75-minute zone here. If at all, if you want to plan your second trade in the fine-tuned zone only, you can plan. If you convince it is a high liquidity zone because of LOTL scenario. But otherwise, you can't. Next one is NICA. This is NICA's daily zone. This is also previously we have fine-tuned. I have explained you previously. The same 5 minutes fine-tuned only you can plan. Please, how we fine-tuned, please look into the previous videos, you will understand. Next one, PEL. This is a daily, this is also daily high liquidity supply zone. PEL also we discussed previously. I explained you how we fine-tuned this zone. PEL already we discussed previously. So please look into HLQ, previous HLQ analysis videos. So I don't want to repeat the same explanation again. But in the recent time, any zones are created here, that is the one we need to verify. All these are all medium-sized candles, no proper leg outs here. Or maybe if you considered failed ERC, it is so that's why this is the area we don't have any order flows. The previously what we discussed. Next one is Supreme Industries. Supreme Industries also we discussed previously. Already it is having a fine-tuned 5-minute zone. This is a high liquidity zone. This is the one, high liquidity zone. Why it is high liquidity zone? I think Friday video we discussed. Friday. Do we have this? Yeah. Actually Friday I did not consider this. During the live session only, I realized my mistake and then drawn this zone. So Friday video, please look into the Friday analysis. Friday I did not initially consider this trade, but in the live when I am explaining, I realized because it is a high liquidity zone, we can consider this as an aggressive trade. And also in the reverse engineering, we have drawn these zones. 5 minutes, from 5 minutes I went to 15 minutes, from 15 minutes I went to 75 minutes. Initially why I left is 75 minute zone is not clear whether to consider these candles as a base candles or leg candles. I left it. But when we did reverse engineering, we have a 5-minute zone acting as a high liquidity zone, and that is there inside 15-minute zone. Then I thought maybe we can consider this as a rally-based drop. At some extent, we can compromise and drop. Initially, I did not convince myself initially. These are the base candles. That's why I left. But in the live analysis on Friday, I realized here there is a high liquidity zone testing again and again. So I should have drawn this zone. So that's why if it is a high liquidity, until the zone is violated, you can plan the trade. But anyway, today price did not enter into the zone. This is today's candle. Angel 1 we discussed, DMart we discussed, SRF we discussed, and Tata Communications. This is a daily high liquidity, sorry, not daily, 75 minutes high liquidity zone. Rally, base, rally. I think previously I explained Tata Communications. I'm not sure, in case if I am not. Software identified this as a rally candle, 4 base candles and rally. And this one fine-tuned with 15 minutes time frame. In the 15 minutes, we have rally base with hidden body rally candle. This one again fine-tuned with 5 minutes time frame. We have a rally 1, 2, 3, 4 base candles and again rally with hidden body. So this is the way we have drawn. I think previously I explained this zone. And today we didn't get a trade in this zone. Morning 9:15 candle entered in the zone, but not up to this fine-tuned area. Cummins we discussed and Patanjali we discussed. So these are the high liquidity zones we identified in today's in the previous session and analyzed as per today's market. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.